Want to trade Bitcoin without owning it? Now, there's an ETF, or exchange-traded fund, through which you can trade Bitcoin. 8 years after the first application for a Bitcoin ETF was filed by the Winklevoss brothers, the first Bitcoin ETF in the United States began trading at the New York Stock Exchange on October 19th this year. One of the leading providers of ETFs, ProShares, launched a new fund linked to Bitcoin futures. That sounds exciting, but perhaps also confusing. That's why we're here to explain exactly what Bitcoin ETFs are. Now, let's dive into the video. So, what is a Bitcoin ETF? A Bitcoin exchange-traded fund, or ETF, lets traders gain exposure to Bitcoin via traditional stock markets without needing to directly buy or sell the digital asset on a cryptocurrency exchange. It's a fund that specifically tracks the price of the leading cryptocurrency and allows traders to purchase or sell the security on a stock exchange throughout the day. They can be cash settled or physically settled, meaning investors will receive either fiat currency or actual Bitcoin upon exiting their trades. The fund, which trades under the ticker BITO, will track Bitcoin prices through futures contracts traded at the Chicago Mercantile Exchange, also known as the CME. For cryptocurrency enthusiasts, ETFs are the holy grail that will boost liquidity and the adoption of cryptocurrencies for investment purposes. Michael Sapir, CEO of ProShares, emphasized that the launch of the ETF constitutes a milestone. He stated that 1993 is remembered for the first equity ETF, 2002 for the first bond ETF, and 2004 for the first gold ETF. And now, 2021 will be remembered for the first cryptocurrency-linked ETF. Sapir also said that the ProShares fund will provide exposure in the cryptocurrency to investors who have a brokerage account, but do not have a desire to go through the hassle and learning curve of establishing another account with a cryptocurrency provider, or are concerned that these providers may be unregulated and subject to security risks. Who can invest in ETFs, and how do you trade them? You don't need to be an accredited investor to purchase ETFs. Anyone can invest in them. All you need in order to begin investing in ETFs is to set up an online brokerage account. What are the pros and cons of trading ETFs? While it might seem counterintuitive to invest in a Bitcoin ETF rather than buy actual Bitcoin, there are several advantages to doing it this way. There's no need to go through the process of having to store crypto safely yourself. Buying an ETF through an online broker is significantly more secure, faster, and less prone to outages than purchasing digital assets directly from a crypto exchange. There are much clearer tax implications and guidance for traditional financial products than digital assets. Stock exchanges are more liquid than crypto exchanges, so it's much easier to buy and sell ETFs. That's a lot of advantages, but there are also several disadvantages to investing in a Bitcoin ETF as opposed to buying the asset directly. ETFs can only be bought and sold during market trading times, whereas crypto markets run 24/7. This means that if the price of Bitcoin moves sharply, you could potentially have to wait hours before you have the chance to offload or buy up more. It's free to hold your own Bitcoin, but ETFs charge management fees. Buying ETFs requires you to complete Know Your Customer (KYC) checks, but Bitcoin can be bought anonymously peer-to-peer. ETFs require you to trust third-party custodians. Caveats of investing in futures-based Bitcoin ETFs. While ETFs provide exposure to a rapidly growing asset class, ETFs based on Bitcoin futures prices come with several caveats. For one, they may trade at a significant premium or discount to Bitcoin's spot price. For example, the annualized premium for CME Bitcoin futures increased by 15% as compared to Bitcoin's spot price in recent days due to investor expectations for the approval of a Bitcoin ETF. A situation in which longer-dated futures contracts have higher prices as compared to short-term contracts, known as contango, could lead to losses for funds that track the prices of volatile assets like Bitcoin. Karan Sood, Chief Executive Officer at Cboe Vest, told the Wall Street Journal that the actual returns from funds based on crypto futures contracts can be quite different from Bitcoin's spot price. Bitcoin ETFs based on CME futures contracts could also be more expensive than other similar products. Bloomberg Intelligence estimates that fees for a Bitcoin ETF are expected to be 1% for every $1,000 invested. According to the firm, the average active equity ETF charges 0.71% in fees. The cost for Bitcoin ETFs will be further magnified during the expiration of the underlying futures, when long-term investors roll over contracts to a new period. Eric Balchunas and James Seyffert, analysts at Bloomberg Intelligence, said traders may use the new Bitcoin ETFs, but they expect their appeal to longer-term investors and advisors to be more muted because of the costs to roll futures. Still, the debut of a futures-based Bitcoin ETF is cause for celebration. It represents a significant evolution in the advance toward a fund based on Bitcoin spot prices. Matt Hugan, Chief Investment Officer at asset management firm Bitwise Investments, told CNBC that the homework shows that the crypto market has changed. The Bitcoin market has matured to the point where the CME Bitcoin futures market is actually the leading source of price discovery in the entire world. Prices move on the CME market before they move on Coinbase, Kraken, or FTX, and as a result, it satisfies the SEC hurdle for a potential approval of a spot-based ETF. Bitcoin prices set a new record on October 20th, charging beyond $66,000 after news broke about the listing of the first Bitcoin ETF in US markets. So, key takeaways from this video are: the first Bitcoin ETF in the United States began trading on October 19th. The ETF tracks Bitcoin prices through futures contracts traded at the CME. 3 other Bitcoin ETFs are expected to make their debut in trading markets in the coming months. And while they offer exposure to a rapidly growing asset class, futures-based Bitcoin ETFs come with several attached caveats. We've come to the end of today's video. If you found this video interesting, make sure to like it and share it with your friends.